incredibly aggressive. And when you recognize that this 349,000 is where we're at, and the largest long position the banks have ever held is 408, you can see that we're not so far away from there. How's it going, fellow traders? Magic Trader here, and this is your latest CFTC data that was reported on July 16, 2024. Welcome back. Glad to have you guys back. We're going to take a deep dive into the positions held by the big institutions and see what they've been doing. So let's start by taking a look, as we like to do, by examining the just a little smorgasbord of positions. Okay, here's a snapshot that we have of their positions. And as you can see, I like to take a look at the change column because it really points out what the institutions have been doing over the last, over the prior week, since the prior week. And so take a look here. Okay, here's a change column. This is what I like to look at. And I'm looking for big numbers, okay? Big numbers. And what do I see? Big number, 102. I look over, that's the pound. Pound, extremely bullish move over the last the last week. If we look here, we see 45,000. That's the USCAD. Extremely bullish move, 45,000, okay? Pretty big. Gold, bullish move. Look at that, 58,000, okay? So gold made a bullish move. The pound made a bullish move. The US CAD made a bullish move. And now let's take a look at bearish. We see minus 61,000. That's for the US dollar Japanese yen. Remember that big push down on the US dollar Japanese yen? All right. So we're going to later on take a look at what took place there. So these are the ones that stick out: US CAD, pound, US dollar Japanese yen, and gold. All right. So those are the ones that made the biggest moves over the last week. That's important to me because I've mentioned this before. There's usually just a handful of assets that the banks make serious moves on, while the other ones kind of just don't move as large. So this past week, those were the movers: US CAD, pound, the US yen, and gold. Okay, so now let's move into the data and see what we can see. Here's gold. Look at longs, 349,000. That's incredibly aggressive. Incredibly aggressive. And when you recognize that this 349,000 is where we're at, and the largest long position the banks have ever held is 408, you can see that we're not so far away from there. Okay? We're not so far away. That tells you that if you're thinking about going in long, it may be short-lived that long, okay? Here's another thing that you should be focused on. If you are thinking about going long, take a look here. Look at the coloration of the cells here. What color is that? It's green. That's right. That means they were bullish, right? What do you see starting to creep in here on the cells? If you look really closely, you can see a little bit more blue starting to come in. So do you want to be buying gold when the banks are starting to become neutral gold? I don't think so. I mean, there could be some short-term moves to the upside in gold, but you'd have to look for those long signals. And so far, we were watching price up throughout here in this ranging, and it was ranging for quite some time. These are weeks that we were watching. Weeks. Every candle, it represents a week. And look, a little bit of a move to the upside and then down. A little bit move to the upside and then down. And then we finally broke out of this range just recently. And price retraced back to the area of demand that was created, which was good. And we're watching for a long signal. So far, it hasn't been produced. If it's produced, I'll take a trade short term. Okay? Why short term? Well, because the data suggests that if you're going to get in long, it better be short term, because this momentum is short-lived. All right. So very powerful stuff to use the data in this way to determine if you're going to take a position, how long should you be holding that position for. So that's what I'm looking for I'm looking at in terms of gold. Oil, they added some to their longs, 338, 360s, 379. You see that price was rallying up. Not a very aggressive move. Momentum died. Now we're shooting to the downside. This is why I'm not trading oil. These moves they happen so randomly, you could never know when these moves to the downside are going to take place. Yes, the sentiment is bullish now, but it can easily go into neutral territory. And these shifts in direction can happen at any moment's notice. So it's not the type of chart that I like to trade. So I move along. US dollar. So US dollar, we are watching the US dollar. They were aggressive with short positions for a little bit of time here. And it didn't make much sense, if you remember, because price was rallying up into an area of supply. But they since offloaded those shorts, and we can see that, you know, there was a little bit of a pressure to the downside. They came in, they added some long positions throughout here, which caused a little bit of a move to the upside. And now price is reacting again from this area of supply up here, and we're seeing a push to the downside. This is not a sustainable type of situation, all right? We were bearish throughout here, all right? But price was moving upwards. You remember that? And now we're entering a little bit more into neutral territory and a bit of bullishness. But this is not something I want to trade. When the data and the charts and the supply and demand dynamics are not in sync, I stay away, all right? Because then that means there's something else happening. And if there's something else happening and it's not in line with my objectives, which is to enter into a position in line with the institutions so that price can move after I enter it and hit my targets so I can make big returns with little risk. If it's not in line with that, I don't trade it. Simple as that. So we move along and look for something else. Aussie. So Aussie, they've been getting aggressive with their long positions. And over a very short period of time, look at what positions were back in June 11, 45. All of a sudden, boom, 106 within 6 weeks. And what do we see? Well, we can see it represented on the charts by a big drastic move to the upside here, falling short of hitting supply, and then big drop to the downside. So you see why I'm not even trading the Aussie as well. Because first of all, shorts have been the main aggressive position, but we contacted some demand here. And so the only thing causing price to go up and down is the accumulation of shorts and the distribution of shorts. Not exactly what I'm looking for when I'm looking for a trade, okay? Now we look at net positions. They went from bearish to now a little bit of bullishness. Does that mean price is going to start heading higher? Not really. Not really, okay? So nothing strong for me to trade here, so we move along. USCAD, look at what we have here. Look at long positions. Remember when we reached 170,000, what did I tell you? That they're going to take some profits on those long positions, and they did do that. They took some profits on those long positions, and here's what it looked like on the charts when they took profits, okay? Not a big move at all. Not a big move. And now they came back in with some buying, and we see pressure back to the upside. Do I think this is sustainable? Do I think that they're going to continue pushing price to the upside? I mean, it's possible. We're seeing evidence to suggest that dollar pairs could go higher in the coming weeks. But this is not something that I'd want to be trading long in. They're reaching maximum size again. Okay, they took some profits. Now they're going back up again. I wouldn't feel comfortable holding a long position knowing that they're just maxing out on their long positions. Okay. But there are indications that we might be seeing more upside. This could stall out here at the highs and then turn over. We might be seeing some bigger moves on other pairs, and we'll get to another pair that I think is better odds. US Swiss, look, increase in shorts, or in longs, I should say, 49, 51, 56. Price not doing much. Look, we were aggressive here, went up, started taking profits, aggressive again, but price is not really moving upwards. Long exposure, 90%. That's pretty aggressive. A net position is pretty aggressive, okay? But there's nothing to dictate exactly how price is going to move. There's no supply and demand on the lower time frames that are high quality. There's no structures. It's not what I want to trade. So I will sit on the sidelines and wait for something a little bit more clear. Euro US dollar. This one's been an interesting one. Look at the long positions. We can see that they've been adding to their long positions over the last few weeks, but nothing serious. Last time I made a CFTC video for you guys, price was down here, and I had forecasted a move to the upside, and that's exactly what we got. When shorts reached that amount, they closed them off, which caused price to rally. And now we're at that same spot in terms of the data. So, bullish bias? Yeah, I do have a slight bullish bias here. The move to the upside. Now, I want you to look here at the latest information here on net positions. Take a look. We were bullish. Okay. Remember I told you they were going to be taking profits on those positions? You remember that? I said, watch, they're going to take profits on longs. And that's exactly what they did. So they took profits on longs up till here. Look what happened there. They went bearish, and they went bullish, and they went bearish. Now they're going bullish again. Is this something that you want to open up a position with? This is not the situation that I'd like to open up a position on. I want there to be something sustainable. I want it to be building. I want the charts to be showing me that they're creating structures to the upside or to the downside. If those things aren't in place, then what am I trading? Yes, you could take some money out of the markets by doing some short-term trades here and there. Some will work, some will not. Do I have a bias on price right now? My bias is that we'll likely see some pressure to the downside. But do I want to trade it? Not really. We do have a setup. I posted it in the forum for members. But do I want to put my money on it? I think it's decent odds. I posted it just as a setup that we can learn from, to watch to see how it responds. But do I really think it's high odds to be shorting right now? No. I like to swing trade. I like to open up positions from small risk and look for big targets so I can get big rewards. This is not that situation. So I move along. And we get to pound. Remember pound? Aggressive move? Yeah. Look at that big aggressive move in the pound. Big move to the upside. And look at positions, 183,000. This is the largest long position the banks have ever held on the pound. And what do we have? We have price contacting a supply area. And they're massive with longs. What do you think is likely going to happen? Okay. Likely we're going to see a sell-off and price is going to be dropping. US dollar, Japanese yen. Remember that push to the downside? Yeah, the media told us that the Bank of Japan came in and they're helping the yen. But what I'm seeing, the strong evidence, is that the banks took profits on long positions. See that? 223 down to 198. That's profit taking on long positions. And we can see on the chart, that's what fueled the move to the downside. Where did it fuel it to? All the way down to a area where the banks were buying. So now we're seeing bullish pressure. Remember how I was telling you that we see evidence dollar-led pairs are going to be stronger? This is the highest odds one, is the US dollar, Japanese yen, because we have massive demand that's coming into play. All right, last but not least, the Kiwi. We said profit taking. We told members profit taking on long positions is going to fuel a move to the downside, and boom, look at price move to the downside. Now we're entering into neutral sentiment slowly, not high odds. Do I think continued move to the downside is likely? Yes, I do. So we'll be watching for that, ladies and gentlemen. All right, so that's it. I hope you enjoyed it. I hope you got a lot out of this session. I hope, if anything, you understand what is high odds, what is not, what are the situations that we're looking for that presents the best and most ideal situations to trade, and what is not. If you trade in situations that are not ideal, you're going to lose your money, period. You will. You might find a few small day trades here and there, but if that's what you want to do, fine. Try it and see how that's going to work out for you. But for me, I'm looking for something bigger. I'm looking for bigger profits, smaller risk. And this is not the situation for that, okay? If you want to come and learn, it's great. You should. We're starting a level 2 class today. Actually, in 24 minutes, we're going to be starting our first session of our level 2 class, where we're going to teach you about trends and structures and what we're looking for, something that's sustainable, something that we can enter into position, hold it for a long time. What does it look like? What do those trends that the institutions create look like? So if you're interested, come and join us, www.whiteoakfx.com, and sign up for our newsletter, because we are offering a scholarship opportunity right now. If you want a chance to win a scholarship opportunity to participate in our level 2 class, sign up for the newsletter, www.whiteoakfx.com. Scroll down to the bottom, sign up for our newsletter, and you'll be getting news on how to do that. All right? We just sent out a newsletter a couple days ago with instructions, and there'll be more instructions coming your way. Until next time, take care. Have a good one. Bye-bye.